Welcome back to the Caspa Silver YouTube channel. In today's video, we're going to be talking about Quant. I'm going to be comparing Caspa to Quant, and this is probably one of the most requested currencies that people want to hear my opinion on. And to begin, anything that I say in this video is obviously not financial advice, and it is just my opinion. You're probably not going to agree with it because I have a very strict uh, conservative type of way of investing when it comes to crypto. And so let's just get straight into it. So to start, I would say that Quant probably has the best chart that I've seen for a currency that has an ICO. It's honestly has a really decent chart for the fact that it has an ICO, but of course it did go through an all-time high and then it dumped very bad all the way down to $50. And then during the bear market, it actually did have a little bit of a run up. I'm pretty sure it's based on just different news stuff that's coming out that I may get into a little bit further down the video here. But let's go ahead and just take a look at the basics here and just kind of see what is Quant. So Quant launched in June 2018 with the goal of connecting blockchains and networks on a global scale without reducing the efficiency and interoperability of the network. It is the first project to solve the interoperability problem through the creation of the first blockchain operating system. To learn more about this project, check our deep dive of Quant. So we could see here that the basics is it's a type of blockchain, and ultimately it's not even a its own blockchain because this is a token. It's not its coin. It's not a coin. It's on the Ethereum network. So to begin with that, I do want to say that Ethereum only exists mainly because of Jonathan's work. Jonathan Samplaninski is the founder of Caspa. The founder of Caspa actually was trying to propose the Ghost protocol to Bitcoin to fix its issues so that Bitcoin could potentially become a peer-to-peer cash system. But since they are very hard to convince on making changes, the Ghost protocol was never actually implemented into Bitcoin, which could help transactions be faster and still be feeless too at the same time. So because of this, Jonathan's work basically was just put into the world with all of this math and everything. And Ethereum saw it and said, hey, we're going to implement a modified version of this because it is very difficult to implement. It is a new protocol. So they decided to implement a modified version into Ethereum. They even cited Jonathan and Aviv, which was one of Jonathan's helpers in creating this protocol. Vitalik cited both of them in the white paper because it's the reason why Ethereum was pretty much able to exist because of this protocol that Jonathan created. And Jonathan is the founder of Caspa, who has now created the Phantom Ghost DAG protocol, which is basically one of the last protocols after his many protocols that he made that eventually birthed Caspa. So to begin, when it comes to founders, if we're comparing founders here, we could see here that the founder of Quant is just a person that has a lot of experience in security and whatnot. It's been involved with Bitcoin and was interested into Bitcoin, but decided to basically make a company and learned that he can use crypto to profit off of the currency and fund his company. That is really what's going on here. If we go a little bit deeper, we could see here that the project was funded through an initial coin offering, an ICO, in which $11 million was raised out of a $36.9 million hard cap. The project falls squarely into the interoperability solutions category of blockchain platforms, which is highly competitive. There's tons of cryptocurrencies that are trying to do this. It's designed to help bridge the gap between various different blockchains and enterprise software using a simple plug-and-play solution that doesn't require teams to deploy any new infrastructure. So really it's offering basically a software using Quant, and then Quant is the native token that you use to pay the fees and the licenses to actually operate the software. That is from the best I can explain it from my research. Other than that, uh, there's not, I mean, the utility is just that, if it needs adoptions for these, from these companies and institutions to use their Quant software, and then they'll be paying the fees in Quant. So that's why Quant will have some type of utility. So the technology allows businesses to create Quant describes as a multi DLT smart contracts or maps. These are essentially smart contracts that exist across multiple distributed ledgers, thereby allowing decentralized applications, DApps, to leverage the data and capabilities of multiple platforms to provide functionalities that was not possible before. So Quant also supports so-called multi-ledger tokens, which are digital assets backed by real funds held in escrow with the financial institutions. These MLTs can be used to represent stablecoins, vouchers, loyalty points, central bank digital currencies, and more. They can be issued and used across multiple distributed ledgers thanks to Quant's over-ledger technology. So ultimately, I see here that Quant is basically in the central bank digital currency business, which I'm highly against. And this is why I would never invest in Quant. Is one, because of ICO issues. They have pre-allocated coins to the team like crazy. If you look right here, you could see that the company took 54% of the supply over here. So they're holding a ton of the supply. I know right now most of the tokens are in circulation, but 2 million are still held by the company, which that's a risk because that means that they can dump on you on any time. I could see Quant actually beating its all-time highs probably in the next bull run, but then eventually we'll have the final dump. It'll be like a double pump and dump, kind of like what Cardano had. It had its pre-allocated coins, and if you look at the chart for Cardano. All right, so another problem is I'm trying to look for information for Quant, and it's just not that available online. It's not that easy to find, but so I have to resort to Bard. So please mind that Bard may not be super accurate with its information, but when I look up how to run a node with Quant, there's like a tier system, it looks like, and you actually need 500 Quant to run that tier system. Supposedly it is going to drop down to a little bit less than that. But if we look at how much Quant or how much money that is to run a node, you could see that to run that tier system node, that would be $51,000. That's kind of like the same thing you need to run a Ethereum node. So if a normal investor like you and me, we don't have $50,000 to run a node for Quant. So what does this do? This centralizes the coin, and it means that the validators who are securing the network end up being central entities. It ends up being Coinbase, Binance, all these exchanges, because since you can't run your own node for Quant, you're going to have to go to these central entities to stake Quant, which is Coinbase and all that. That means they're the ones that are running the network. That means the token is compromised because, and it's the same thing with Ethereum too. Like, since you can't run a node yourself for Ethereum because you need so much money, and it's only allowing the rich to run nodes, it creates a rich get richer system. So therefore you go to these exchanges to stake your currencies. These exchanges are controlling the network basically. And because since it's a proof of stake token, that means the more coins you have, the more control you have over the network, over voting and all that kind of stuff, what goes down with the token. So essentially, you're literally just making the rich get richer with this kind of coin or token. And you also risk the chance of security laws getting involved here. I know a lot of people just say security laws are just FUD, like XRP being a security is just FUD, just keep buying, it's going to go to the moon. Well, sadly, it's not just FUD, it's real, and it's literally held XRP's price down for the longest. And people like to say that, well, remember, the rest of the world exists, America, we don't need America. Well, if we really didn't need America, then why is the price still where it is when I see all these partnerships that XRP is doing and all that kind of stuff? Same thing with Quant here. I mean, Quant is doing a partnership with the Bank of England to implement CBDCs, which again, I'm not a fan of CBDCs, and I don't like CBDCs at all. but I don't even think they're really going to be using Quant specifically. They're just using the software and the technology of Quant. But again, they probably have to use it for like licensing fees or whatever. I did not go deep into that. But regardless, a company, because this is not a currency, a company that's using investors' money to fund themselves, to keep themselves operating, to help make CBDCs exist is not worthy to be in the cryptocurrency market. It's worthy to be on the stock exchange listed as a security because cryptocurrency, the whole point of it was to be decentralized and away from the government control. So it doesn't make sense to me that the government would allow a company to be used to facilitate global, worldwide money usage and all that kind of stuff and make these CEOs trillionaires or rich, because of that. It doesn't make sense to me. The company still holds 2 million coins. That means they can dump in you in the future. So ultimately, it doesn't make sense to me. I could see this going up in price just simply because of the hype and the fact that the company still has 2 million coins. So they're probably going to let it go pretty high to then eventually dump on you again after the next bull run pretty bad. You can look at the Quant to BTC chart, and this chart basically shows that if Bitcoin's going up, then this will be going down. So when this goes down, Bitcoin's going up, and you could see that if you just would have held Bitcoin since October of 2022, you would be doing better than Quant because Bitcoin's been outperforming Quant as Bitcoin keeps outperforming many coins. But then looking at Caspa, Kaspa has definitely been outperforming Quant since the bear market for the whole entire time. And that is because of the people behind Kaspa just don't compare to these other projects. I mean, the things that Quant is trying to do, Kaspa could do on its own once it's fully finished and fledged out, and still remain decentralized. And that's the key thing. There's going to be centralized things that could be created on top of Kaspa, but Kaspa being the native coin currency would still be super decentralized, which is the whole point of crypto, is to not just have some centralized organization, a company using investors' money to fund themselves to operate, to survive during a bear market and all that kind of stuff. So Quant, to me, I can care less where it's going to go. I'm pretty sure my bags will do better just holding Bitcoin and Caspa like I do, because I am just like a proof of work maxi pretty much, because I believe in the tech of cryptocurrency, the original tech, which was the original idea of decentralization and government not having any kind of control with how my currency works. When you hold Quant, the government has control of your currency because of the fact that America can randomly say it's a security, it's a proof of stake token. So that means that people who stake their Quant has more control over the network. That means also that when you stake your Quant, you have to trust these centralized exchanges to stake your Quant, which again, the government can shut down. Regulation is not clear, so it's super risky, in my opinion, to be investing in this. And then lastly, CBDCs. I don't want to be investing into the very thing that cryptocurrency was supposed to be like the offensive on, which is government overreach within our finances. And so I don't care about the profit off of this. I don't want to profit that and go against my morals to just make a quick buck, hopefully. And to me, it's risky. I don't see this as a long-term investment that I can, hold this for years to come. It's essentially everyone's just trying to be in this and sell at the top, hopefully, and that's it, and not think about it ever again after you sell. But something like Caspa, with its groundbreaking tech and what it's actually doing, when I look at Caspa, I see it as a financial opportunity, yes, to sell, obviously to make some profits, but not to sell all of it because it's literally becoming cash. It's the whole point of it is to become cash in the future and to just be the best layer one proof of work in existence, solving all of Bitcoin's problems and solving everything that all these other currencies are trying to do. All on the base layer, Caspa already is already solved the trilemma. So I hope you guys enjoyed this video on my take on Quant. I know it wasn't as deep as probably some people want it on the Quant side. Well, because ultimately, these just little things of the fact that it's so centralized already just turns me off in the cryptocurrency market. If I want centralization, I'll go to stocks. But for crypto, I rather invest into tech that is actually doing the decentralization part of cryptocurrency and trying to become a currency and not just be a company using investors' funds to fund themselves. So I hope you guys enjoyed that video live. So I hope you guys enjoyed this video. And as always, don't be average, be different.